Hello guys, welcome back to the Lumley live stream. You should be able to see the screen and everything now. We do have CPI coming out in about 2.5 minutes. So one thing I did want to go through before we can cut between the two. So I do have news just here so I can flick to the side quite quickly. A lot of the times you can just get this data quite quickly off TweetDeck, so it's usually how I go through about having that, especially if I'm live streaming. Now, one thing I did want to go through first is what are we paying attention to coming into this release? So right now, so these are the previous releases from about early 2020. Now, firstly, we need to find out what is the expected release number. So one way to do this is if we just open up Edge, and again, you can get this from many sites. So investing.com is one of them. So what we can get anyway is just the economic calendar, which we'll quickly grab up now just so we can show you. But the main focus on this is going to be the core CPI year on year. And what we can see is the previous was 5.6, forecast is 5.5. So what we're really looking for on this trade is between this blue box here. So if we get below if we get 5.4 to 5.7, well, 5.5 to 5.7, or 5.5 to 5.6 is a fade. Not really looking to do anything within that range. Now, if we break outside and kind of hit this range, if we're hitting the 570 or above, so 5.7% or above, really the stock index is most likely going to get hammered. Reason for that is obviously then what the Fed is trying to do by lowering inflation is not working. But if we can come in at 5.4 or below, we should see a massive pump in the stock index, just because again it shows what the Fed is doing is really working. So that's the main thing I'm watching for. Now we have about 30 seconds till the release. On the left we have the S&P 500, on the right we have the Nasdaq. So we're just paying attention to this. And again, what I'll do is I'll try and do, well, as soon as we see the release, I'll tell you, but if I can, I'll also try and move the screen over, just depending on how big it's moving. If it's moving instantly, I'll just read the number out, and we can just kind of get straight to the release. But with this, yeah, only really looking for that trade opportunity if we come in at 5.4 or below, or we come in at 5.7 or higher. Okay, release has come out, just waiting for the number. We are pumping on it, so hopefully it's a relatively good number. We'll do that. Still haven't got this number coming through yet. Refreshing it. There we go. It's giving me Canadian numbers. I don't need any of that. Seems to be some sort of delay I'm getting from over here. Okay, US core, that's month on month. Year on year came out at 5.5. So it came in as forecasted. So to me, I'm personally not going to be trading this. It's kind of came in line. So again, we were forecasted 5.5, came in at 5.5. But again, at least it is pretty good. At least again, if we go back, I'll disrupt one of these charts so it doesn't hide both. So again, this release ended up coming out basically here. So basically where we were about a month, well, 2 months ago. But again, as long as we're staying at the lower bands, it is going to always be overall good for the stock index. But again, it's within that range, so still not looking to trade it. So we can close that down. And again, we'll just watch it. So firstly, what are the markets pricing in? So what we've done here is you can see this red line. This is the support, obviously green line resistance. Now, coming into CPI, what the markets were pricing in, they were actually pricing in a smaller move than before. They were pricing in about a 1% move in the overall market. So again, that's what these lines here is, roughly a 1% move to either side. Again, on the actual release, we haven't actually moved all that far. Usually this happens within the first kind of minute, maybe two, but we've only done about half the move priced in. And again, that might just be because it came out in line. So really, it's one of those things, especially why I didn't want to hold it with the options, is what's most likely going to happen if you're holding it through the options. We're probably not going to hit now these lower upper bands, or not, at least not be there at the open. So really, if you're holding options coming into this release, really those premiums would have just got destroyed overnight, because again, we did a lot less big of a move than expected. But if we do end up kind of trending, then obviously this will most likely be that reversal reversal position that we can be paying attention to. But it's again, do we actually get that far? Which probably at this rate is probably not going to happen. Again, it's usually those first two candles you've got to be paying the main attention to. After that, we tend to steady out a bit. We also have the US short-term interest rate futures rise after the CPI report, as traders add bets on Fed to pause in June. So again, this release basically just means again that we're going to be more likely to basically not get a hike coming into the next Fed rate, which if we do get, again, that as soon as we do get that, it will be somewhat priced into the market, but just a confirmation of it, we will probably still get a good pump on that release. We now have access to the overall report. So let me quickly start glancing through this. Again, I'll leave the charts on the screen. And I'll just pick out any kind of key information that we can be paying attention to. So April, food increase, it's food away from home that's mainly done. So this is actually already a relatively positive sign. I mean, it did happen last month as well. It's always actually annoying to filter this to the screen size. So what we have here is food away from home and food at home. Obviously, this just means like takeout and stuff. The takeouts and kind of eating out is still increasing in inflation, but at food or food at home, so your groceries, are starting to decrease in inflation again. This is going to be good, especially in some sort of a recession, because obviously people are less likely to be eating out. So as long as, you know, what can kind of people afford to do, if it's the eating at home and that's going down in price, that's always going to be a good thing. We do have a bit of inflation over on the energy, so energy commodities, gasoline, but fuel oil is coming down, which again, to the normal person is going to be one of the main things, especially over in the US, obviously, where you kind of need to use cars as an everyday thing. We'll quickly just flick through this. Imagine more people actually care for the S&P, so we'll actually put this on the right. We'll zoom that in a bit just to make everything a bit more clear. And then again, we can kind of flick through here. So we've got the food, which is going to be, I guess, the main thing on here. Food index was unchanged in April. Okay, now we'll just start kind of watching that reaction. Does seem though it might end up being a fade. Again, we did come out as forecasted, so an actual overall fade would not be so surprising. And then, okay, I'm just going to flick through the CPI. I'll point out anything that kind of is key through this release. Okay, looks like on the S&P actually we might start breaking into the highs. We're a bit delayed and lagging on the Nasdaq. But again, if we can break this, again, we did come out in line, so it's not something if I was trading, I wouldn't be doing too much size, just because if we do the breakout, again, the majority of this move is somewhat already priced in. But if we can break into that high, again, if we can, that 4170 is going to be that target. Again, that's what the overall priced in move was for the CPI release. And now we're kind of just, looks like we already pulled back. We're just getting a bit of consolidation. Okay, and in a second, we'll kind of recap then all the key things that have come out throughout the whole CPI full report. So to start off with the food then, so the food index is unchanged in April. Food at home index though did fall 0.2% over the month, with 4 out of 6 grocery store indexes decreasing. Now, fruits and veg index decreased by 0.5%. Again, these are always just key things to be noting if you do maybe trade on the future side. There is always possible opportunity off these releases. Now, meats, fish, eggs, poultry index decreased by 0.3%. Dairy and related products decreased by 0.7%. Now, other food index, so again, this is kind of what we covered earlier, already rose or has rose by 0.2%. So again, this includes things like the cereals, bakeries index, which have all increased by 0.2%. So that's pretty key. Now, food, what else looks kind of key? So the energy index rose 0.6%. For the April release. Gasoline index increased 3%, natural gas index decreased 4.9%, electricity index decreased 0.7%, and the fuel oil index decreased by 4.5%. Again, if it's things that you use in your own life, again, you always want to hear the decrease. It's always good, like the fuel oil. Obviously, that's going to be good at that is decreasing. Depending on your house, obviously things like nat gas and stuff and electricity index will be the one you prefer to hear. The nat gas is the main decrease of 4.9%. The electricity index has only decreased by 0.7%. Now the energy index has fell 5.1% over the last 12 months. With gasoline index decrease of 12.2, nat gas of 2.1, and the fuel index down 20% over the past 12 months. So going on to then all items, minusing out food and energy, because again, they're usually some of the main things in which contribute to the inflation figures. So without the food and energy, inflation still raised 0.4% in April. The shelter index increased. So again, obviously that's housing, increased by 0.4%. Rent rose by 0.6%. And owner's equivalent rent index rose by 0.5%. The actual home index did decrease by 3%. Used cars and trucks increased by 4.4%. So again, obviously over the pandemic, we really saw used cars, and basically just during all the kind of chip shortages, used cars really did have a massive increase. I mean, they're really holding their values and a lot of the times increasing in value. So, and they looks like they might be starting to bounce a bit again. The used cars is up 4.4%. Also, vehicle insurance has now increased by another 1.4%. Airline fares index fell by 2.6, meaning basically just people are less likely to be traveling right now. Or at least it means that they're less likely to be booking as of right now. They might have booked in advance. That's why I never really pay attention too much to something like that. Unlike kind of the food index, where obviously people are going to be having to buy as they use it. Things like the airline fares, people just may be buying in advance. I don't think it gives you a massive and kind of clear indication of where we currently are sitting. New vehicle index actually decreased by 0.2%. And the communication index also decreased by 0.1%. And as well, just to note, we are breaking these highs now on ES and NASDAQ. Looks like we're already doing a slight pullback. when I'm trading, or if I was trading these short buys as well, what I really like to see is kind of a bigger pullback on these and wait until we kind of get a clear divergence on the RSI. Again, even if it's just on the 1 minute, can usually just make that trade a lot cleaner. But again, really just looking for that move to around 4170 if we can push all that way. And we'll quickly note the resistance on the Nasdaq as well, because I haven't actually plotted it out in advance, just in case one hits one before the other. So we'll just change that to about 90, so it's kind of a whole level. Put that as a green target. There we go. So if we're looking at the Nasdaq again, that's going to be our key target on there. So the main thing as well is when we're watching these charts as well, it's whatever hits first again can signal the other one. Then just to finish it off, medical care index was unchanged. Hospital service index rose by 0.5%. Prescription drugs increased by 0.3%. And then, so all items less food. So basically, again, when we're talking about all items less food and energy, okay, we're breaking in. Big push on the Nasdaq. We just broke up to that 1%. Again, that's what the options are priced in. Now we're watching what happens on the S&P. It seems to be a bit lagging, but again, we always know the Nasdaq is going to be more volatile. But again, if we can kind of push up to there on the S&P, there could definitely be some opportunity on there, especially if we start to pull back on the Nasdaq in advance. If the S&P can start pushing, they kind of diverge a bit, we push into that 4170, could definitely look at a short play. We'll watch this for just a bit longer. Again, the majority of the moves usually happens in about the first 5, and then look for about the first 20. And then after about the first 20 minutes, I don't really, or wouldn't be taking any trades after that. I'd be waiting for the markets to open. Oh, but yeah, just to carry on from what I was saying, yeah, so all items, less food and energy. Again, that is what core is. It kind of cuts out the food and energy. But yeah, 5.5 over the past 12 months. Again, that's the figure we were talking at the beginning, the year-on-year increase. With shelter increasing 8.1%. Again, this is talking about the 12-month figure, but shelter index has increased 8.1%. So it's definitely getting expensive. I think that is the leader as of right now over the year-on-year. That is the main summary over the core CPI actual release. So now again, it's just watching the price action. What are we getting? What kind of moves are we receiving from here? I might actually get the futures account open just so we can potentially trade this some short buys. Okay, that's loading up. Oh, it's all opening on this chart, which is not what I want. So let me move that out of the way. Again, it's more waiting. I'm kind of waiting for that ES to break to the high, and then that's probably where I'll look for a trading opportunity. Well, I probably will trade this with the micro, so again, because don't forget the S&P is at $12.50 a tick. So that is a lot of risk, because again, this is going to be volatile coming into this level. So we're now looking at the MES. Probably look to do it in quantities of 2 contracts at a time. It's already getting that hesitation, but again, this is why it's actually good to know, and I'm kind of glad we did put that Nasdaq before that move, is we can now understand why the S&P is starting to temporarily kind of hold at this level, instead of just breaking those final kind of 6 points to the 1% pricing. We can just make sure that's accurate, because again, the S&P actually plot a bit before the release. So the 1% there is actually, we'll change that to 69. Actually, 70, we just keep it on that psychological level. Will probably be a bit stronger. Again, we'll probably watch this for about another 3 or so minutes, and then we'll probably call it at the end if it doesn't kind of push up to that next move by then. The VIX, or the CPI volatility index, actually hits a new 1-week low, which is quite surprising after the release of CPI. But again, I'm guessing this is because we have done as much, well, a smaller move than expected on the actual release. But I do like that. You can see near enough to the penny that Nasdaq, oh well, missed by 2 points, or went over by 2 points, but near enough to the penny that Nasdaq broke. We're starting to see again a bit of divergence between the S&P and the Nasdaq. Obviously, the Nasdaq still pulling back quite heavy. S&P near those highs. Again, we're kind of waiting for that one more pop. If we can break to that 4170, that's going to be the ideal trade location. Might just send out 2 contracts.
Order submitted.
To kind of trade near there. It's broken next high, or recent high. Starting to see the Nasdaq push up as well. Again, this could be a relatively good thing because it's just going to help that S&P move. The only thing I wouldn't be that keen on is if Nasdaq ends up breaking its high, because if it does that, we could kind of see a breakout on the Nasdaq, and then we could get a bit halted on the S&P. Looks like we're breaking. I put 4168. Okay. Looking for about another 1.5. Might actually
order filled.
Hitting just with some size, just because again that's actually the exact pricing I believe of the 1%. Yeah, the 1% is around the 169. Nasdaq retested its high as well.
Order filled.
There we go. Lovely move.
Order filled.
Close those contracts out. We're up 375 on those locked in. And then we'll focus back on the MES, which we may close out.
Order filled.
I think we're just going to close it out. There we go. Not a bad trade off those highs. I like that. There we go. We made, as you can see, 397 off those. Again, after commissions, up we about 390. A relatively nice move. It is actually continuing to pull back. That's usually the snap move I look for. Looking at what they're pricing in and then playing that pullback on their bet. $400 in about a 1 minute trade. Pretty happy with that. Again, that is kind of the ideal setup as well. You have the Nasdaq retesting while the S&P is coming in at the first time. Again, the majority of size you usually take on the S&P when you see this, because it's probably less likely to break, whereas the Nasdaq could kind of break through. But as soon as we start to see that turn red, weakness show, again, just kind of hitting into those as a relatively short snap trade can be quite nice. I think that is all I'm really going to be trading. Again, the release has been out for now 22 minutes. I think the majority of the move is come out. But again, it's nice to see it get to the pricing move. It didn't look all that likely considering we only did about 0.5% in the first minute. But in time, we did end up trending to it. So now kind of waiting for the open. Where do we open, and is there any opportunities off that opening value? So I hope you enjoyed the stream. I'll probably do one for the next CPI release. Let me know if you want me to do it for any other big releases. But